something we've been really looking towards recently is this global M2 money supply versus BTC. Now, this is looking, like I said, at the total supply of all fiat in circulation amongst most of the world's biggest banks. And you can almost see this as, the supply of dry powder, the supply of capital that's awaiting a better place to be parked. Because I think, especially in the last year, there was a huge narrative about inflation and the amount of money printing that happened post-COVID. And really, I think that drove a lot of the previous cycle once we see this start to rally just absolutely exponentially. And this really coincided with this downwards shrinking supply of global M2 money supply with the tail end of the bear cycle. And pretty much to perfection, as soon as this pivoted, the Bitcoin bottom was formed. So I think I like to look at the macro kind of fundamental conditions initially and then almost work backwards. So after I've seen this, I go into maybe some more on-chain data. So something like the MVRVZ score or the realized price. So this is the cost basis of all BTC on the network. So we can actually look on the Bitcoin network, on the open ledger, to see at what price people are accumulating their BTC at. And we can then say, right, how much are people in profit? Once we get to these levels where people are, 5, 6, 7 timesing the average entry price amongst BTC investors, usually that's a sign that we're getting a little overheated. Whereas once a majority of people are at a loss on their positions, it's not a bad time to actually accumulate. So I'll look at macro conditions. Okay, we're pivoting towards more bullish conditions. Okay, what's the macro on-chain looking like? Well, even though we're not quite, in the most opportune risk-to-reward moment for accumulation, we still have so much room to the upside. Then I'll look at some slightly more shorter time frame metrics. So another one we've
Can I ask you something about the MVRVZ?
Yeah, of course, go for it. Yep.
So I watched this chart quite a bit. If you notice the peaks of the Z score are going down, you have lower highs, no? Why is that? And over time, do you think that exactly it's going to go lower, or might we actually punch above it?
So I think there's a few different things at play. I think the way I initially approach things is my base case has to be whatever the data is pointing towards. Even though I have a personal bias of where I think Bitcoin may peak at, even though I think market dynamics have changed and this time we could see a potential super cycle or break every previous metric, realistically that's just an optimistic background thought until that thesis is kind of proven. So I have to assume that this cycle, the trend of diminishing peaks on the MVRVZ is going to continue. So I would maybe be looking for something like this to happen. I don't know if that's exactly how long it'll take. Maybe we peak slightly above that. I'm not sure. But basically, I think as the Bitcoin market has grown in terms of maturity, back here, there was only a few $1 billion at play. So the amount of capital required to push price up 50, 100, 200% was significantly smaller than today when we're $1 trillion market. The amount of capital inflows required to actually push price up is so much larger that it takes a longer period of time, and we don't get quite these as big pumps to the upside, dumps to the downside. It's a much more gradual, cyclical piece of price action. Also, I think this takes into account the realized price, which is the average accumulation price. And because we're reaching this period where a vast majority of Bitcoin just isn't moving that frequently, this isn't moving quite as rapidly as it did before. Again, if I just clear these a little bit. Whereas the previous cycles, we've seen the realized price shoot up massively in a very short space of time. I mean, in this double peak cycle, even in the 2017 cycle, it had a huge increase to the upside. Whereas the most recent cycle, it is, of course, increased, but much slower pace and not nearly as much. And again, this is just the dynamics of Bitcoin when we have a 21 million hard cap supply and there's 3-4 million lost. There's millions that people are holding that are never going to sell. Eventually, it's just not going to be as volatile until I think there's a boundary that we'll cross where the amount of Bitcoin that's available for trading has such a massive impact on price. So I'm not sure if you're familiar with the money multiplier, I think it's called, or the market multiplier. It's basically in reference to how much capital inflows are required to increase the price. So very simply, if we assume 100% of BTC is liquid in circulation, to double the price, we'd basically need to double the market cap. So we'd need, if we were a 100 billion market cap industry, we'd need 100 billion of inflows to double that market cap. Whereas if 50% of the Bitcoin isn't moving, 50% is completely illiquid, we only need 50% of that capital inflows to double the market cap, because there's just not as many for sale, there's not as many being traded. So I think at some point we're going to cross a barrier, maybe it's this cycle, maybe it's next cycle, where there's only ever at one point 5%, 10% of BTC being traded, and therefore any capital inflows are going to have such a huge positive impact on price that maybe we do see the MVRVZ push back up massively into this region. So that would kind of be secondary case. Like I said, I have to assume that there's going to be diminishing returns, volatility's decreasing, the market's just matured a little bit, but at some point I do think that is going to happen. So maybe it's this cycle, maybe it's next cycle. But again, the supply and demand of Bitcoin, massively increasing demand, massively decreasing supply, coupled with the massively increasing supply of fiat and the massively decreasing demand of fiat due to the inflation and people just having a more risk-on sentiment, I think those are kind of going to work in unison to really push Bitcoin to kind of what I would consider its fair valuation of the future, which is, I don't know, $500,000, $1 million, who knows, but considerably higher than it is today.
At least one thing to notice from the from the MVRZ score is that whilst the peaks are getting lower, the lows are getting higher also.
Yeah. So it's less pronounced on this. Yeah, we actually have, if you look at the Puel multiple, the HODL ratio, we have a few actually that are kind of pointing towards these lows contracting as well. So it's a bit more pronounced here, where again, we have these diminishing returns in terms of the peaks, but then again, we're also getting a very similar thing here where these are contracting a little bit as well. So maybe Bitcoin is coming down into some kind of wedge, something that you're a bit more used to trading. And then at some point, maybe we contract and have this big break to the upside or something.
It's more of like a pennant, no?
Oh, yeah, you're the pattern expert. I've not really traded patterns for a while, but I do think, yeah, this is just a result of Bitcoin maturing, the market cap increasing exponentially. And again, there's some arguments to be made that with more derivatives being traded, the amount of paper BTC that's in circulation, you don't necessarily need to now buy actual real spot BTC to gain exposure. Maybe you're just leverage trading futures contracts. I know the ETFs are spot BTC ETFs, so they actually have to be backed by real BTC, but there's a lot of products out there that you can gain Bitcoin exposure without actually influencing the price necessarily. So that's maybe taking a part of this. There's a lot of altcoins now that, you know, are taking away from the market cap of Bitcoin potentially by having their own narratives. So yeah, it's one of those where I think the changing dynamics may not be immediate, but at some point, all of this is going to compound to Bitcoin potentially breaking a lot of these models, hopefully to the upside.
Interesting. I think all this on-chain data is super important to just know what's happening at the core level.
Yeah. And go on, sorry.
No, and it's just now with the ETFs, would that on-chain data still be as reliable as it once was?
So that's a very interesting question. And I think this kind of plays into the point I was discussing before, where at some point we're going to cross a threshold where the amount of liquid traded BTC shrinks quite substantially. So in fact, rather than the HODL waves, I'll go on to the realized cap HODL waves. So this is looking at the different age bands of BTC holders, but then the impact that they had on the average cost basis. So that sounds very complicated, but it's basically looking at these and this 24-hour band, how much did they pay for their BTC? If it's very high, then they probably paid a little bit too much for their BTC. If it's very low, then it means there's not many new people coming into the space.
When you say it's high, because to be honest, I've seen this chart before and it's a bit, you know, like a volcano is exploding. So
yeah,
what I did was I started to remove certain years. Exactly. Just to get a cleaner picture. So if like you get exactly, so there you have the 3 months, 6 months.
This is
That
6 months plus,
so
yes.
what does this actually mean?
So this is the total impact on the realized price of people that have been holding for at least 6 months. So I'll just open it up in a new tab here. So realized price. This is what I was saying before, is the average cost basis of all BTC on the network. So this is, we can almost see it as the average price everyone paid for their Bitcoin. So this currently sits at around $23,000. When this is increasing massively, it indicates that people are far overpaying for their Bitcoin compared to this average. So when it's up here, people are buying at $50,000, $60,000, $70,000 nearly. This is increasing quite substantially because the average cost basis is increasing. And it does decrease sometimes when people are buying beneath this realized price line. It means that the average cost basis for BTC is decreasing. And when we see this massively increasing, it's usually driven by a lot of new capital coming into the space. So when we go back to the realized cap HODL waves, we can actually see these age bands. Here we go. We can actually see these age bands. Those are the really dark, warm red ones when they're actually entering the space. And judging by how high of an impact they have on the realized price is how much of a percentage increase they have. So when these are increasing, it indicates that there's no new capital coming into the space, and all of the BTC is being held by people who've been holding for a long time, who accumulated at much lower prices.
So the top of these curves, basically, these are indicating that people are holding for 6 to 12 months. I haven't quite understood.
Yeah, so because I've got everything from 6 months plus, when we see these peaks, it indicates that a vast majority of Bitcoin on the network hasn't been moved in at least 6 months. So we can see, especially from 3 months plus, we can see that this peaked most recently at around 90% at this cycle low. So 90% of Bitcoin, less than 10% of Bitcoin was moved more frequently than once every 3 months. So that's a very small amount of BTC.
90% of BTC did not move?
Yes, that is exactly how to interpret it.
In the last 6 to 12 months.
Well, here I've added on the 3 months. For the 6 to 12 months, it was very close to 80%. So we'll just say 80%, yeah. So if you imagine anything, if you imagine any product, service, anything in the world, if 80% of it is removed from the market, 80% can no longer be touched, bought, traded, etc. If the demand remains constant, then again, it's very simple supply and demand economics that the price will increase. So you take into account that 80% of Bitcoin is illiquid. I mean, this has decreased a little bit now, but a huge amount of BTC is just being held. People don't want to sell that. Anyone coming into the market can only buy from the remaining 20% of market participants. Therefore, the amount of BTC being traded is so small. Each purchase has a much bigger influence on price. Therefore, price increases at a much more rapid rate. So I think this was one of the main drivers of Bitcoin's rapid price ascension, not only in the start of this bull cycle, but really if you look at any bull cycle, you know, when this peaked in 2018, 2019 here, Bitcoin ran from around $3,000 to $14,000 in absolutely no time at all. Now, there may have been some other factors leading to that, but we can see this in every single cycle, which really leads us to almost know as a certainty that when there's very little BTC being traded, every BTC bought by new investors coming into the space has a much larger impact on price.
Because supply reduces.
Exactly. And then when these are at the bottom, you can see it's pretty much exactly as market peaks. And these are, if we just take off these higher bands, like I was saying before, when new capital's flowing into the space, when new people hear about BTC for the first time, when they're coming into the market and they're paying extortionately high amounts. So once we could see on the realized price, when this is increasing almost vertically, this is really symbolized by the people that have just got into Bitcoin and are paying considerably higher than the average market participant. So these are what usually push Bitcoin to its market cycle peaks when we get these really exuberant rallies to the upside. These are the retail buyers that are coming in.
And this is the 1 week, or the which accurately has hit the top?
Usually 1 week and less. You can see it's pretty much calling every very, very rapid price increase. These have a massive spike to the upside when that happens. Yeah, again, this is just less BTC is available, and therefore there's just less volatile spikes to the upside. Here, when we could see, everyone piling into Bitcoin, selling Bitcoin, price was only a few $100s, the volatility was absolutely massive, and the amount of capital required to move price massively was much smaller. Whereas now, like we said, it's $1 trillion industry. The amount of capital required to push Bitcoin up 50% is so much more. And not only that, because there are less and less Bitcoin available every cycle, there's just less Bitcoin available to new market participants. Whether this is because they see it as too expensive now, or whether there just isn't as much BTC. But if we just look at 1 year plus, yeah, me too. If we look at 1 year plus, we can see that this is trending to the upside, which means even though we have a little bit of a obscure bit here, over time, less BTC is being traded. More people are holding it for the longer periods of time. And I think the ETF is going to compound this even further, because we're seeing now with these ETFs certain index baskets. I'm not sure exactly which one it was. I don't know if it was a Canadian Vanguard ETF provider or something. But on their conservative broad market index, there's now a small portion of Bitcoin included in that. And now you're going to have people holding Bitcoin, but they don't even know it. People are going to have exposure to Bitcoin in the crypto markets. People are going to inadvertently be holding it in their pension funds, and they're not even going to have known that this is happening. They're just going to see increased returns and be happy with whatever's happening. But every time anyone is buying Bitcoin through an ETF or buying spot BTC to hold for the long term, that has not only a positive impact on you now holding Bitcoin as an asset, it means that the amount of capital required in the future to push the price up even more shrinks. So in the future, if we see this reach levels of 90% or even higher, suddenly only 10% of BTC available to trade. The amount of capital inflows required to push us up 10, 20, 30, 50% is shrunk massively.
Crazy.
Yeah.
It's quite a good chart, this, because every time it goes down and it comes within 5-10%, even though that's increasing as well, you have enough time to notice that we're topping.
Yeah.
If that makes sense.
Course.
So basically, when I look at it now, we have plenty to run, and if we are to go down, at minimum, I think we will go down to 40%.
Yeah, and I mean, again, kind of contracting peaks and bottoms like we discussed with a few of the charts. Maybe this isn't reaching the levels it hit previously. Maybe that's not quite right. But I mean, if these HODL waves come down to kind of this region here, that indicates that we're, a quarter of the way through, 20% of the way through this cycle. And we've already increased from $15,000 to $50,000. What happens for the remaining? Potentially. It's one of these where, again, my personal opinion on what is likely to happen, I put as secondary to what has historically happened. I like to look at the patterns of history, use that as my base case, and then any personal little biases I have a second. So looking at the trend of this, I mean, maybe I didn't draw that quite perfect. If I maybe draw it just from the previous two cycles, something like this. Yeah, I could see us hitting, this 20 to 30% on this, which again, we've only decreased a few percent. We have potentially another 18 months of upside price action as this trends to the downside.
So just to ask again, basically at the moment we are at 55%, 50, something like that. So 55% of the Bitcoin is being held.
Yeah, so I mean, this is for just the 1 year plus, and we actually have a chart just specifically for this, which is the 1 year HODL wave. So if we go to this here, we can see, I mean, this has just started to turn over, but 69% of BTC has not moved in 1 year. That chart previously was the realized cap HODL wave, so that's actually a slightly lower percentage, because even though 70% hasn't been moved in a year, the impact they have on the average cost is lower because they bought cheaper, if that makes sense. So if you're just looking at purely the amount of people that have been holding for a longer period of time, you either use just the standard HODL waves or just something like the 1 year HODL wave like we've got here. And this makes the trend even more obvious when we can see, again, the peaks massively increasing, But then again, the bottom's increasing too. So maybe we don't see this come quite as lower, but there's still going to be new market participants entering the space and buying Bitcoin higher than the average person. So I would give more weighting towards the realized cap HODL waves than just the standard HODL waves. And especially as Bitcoin as an asset grows, at some point, I can envision a future where, we're up here and 95% of Bitcoin isn't moved every year. It's a very not stable asset, but stable holdings. The price at that point probably starts to become a little bit more volatile to the upside, like we said, just because of the supply and demand economics of it all.
Interesting. Could this bounce from this level here and continue going up?
Of course, yeah.
And if it does go up, let's say it goes up to, let's say, just for the fun of it, 75, 80%. If you look back at price, exactly. So when the HODL wave goes up, price tends to come down.
Yeah, I would say it's unlikely we see an increase in this immediately. Because typically at the start of a bull cycle, we see not necessarily people that have been in the space for a longer period of time start to sell, but new people entering the space start to buy. So with this decrease we've seen recently, if I just zoom in a little bit here, ETF purchases are having an impact on this, where this is decreasing because every ETF purchase, every Bitcoin bought means that there was one Bitcoin that's been not held for a year. It's been bought very recently. So then this starts to decrease. So the only way this would start to increase again to 75% is if suddenly no one is selling BTC, but no one is buying BTC. So this is typically why we see when this starts to increase, price decrease, because it just means that there's not as many BTC being traded because there's not as many people wanting to buy. Whereas when this decreases, if we just zoom out again, this is historically indicated a bull market starting. So once this decreases very rapidly, there's new capital coming in, there's new retail, or in this case, there's new institutions, there's new massive capital inflows from the ETFs. So this decreases very rapidly. Whereas now we've just seen this just start to turn over. So again, this started to turn over in early 2016 and we peaked at the end of 2017. Here it started to turn over in, again, early 2019, Q1 2019, Q2, and we peaked again, well, this all-time high, late 2021. So it takes a number of years to play out, and we're only just seeing this turnover. So maybe, again, this is also pointing towards us having 1 to 2 years of new capital coming into the space. And all this new capital is just going to push price up higher and higher.
So basically the way I see this chart is as price starts to go up, people start to move their Bitcoin, possibly on exchanges, getting ready to sell.
Exactly.
And so the Onchain Data sees this, and it starts plotting this chart that you have over here. So it starts to go down. Why? Because more people start to do it, and they don't qualify in the year because obviously they would have moved it 10 months or 5 months or 2 months before. So it starts to plummet.
Exactly. That's exactly right. Yeah.
And then you hit a spot where it's the high in this case every single time, where Bitcoin holders, the last ones basically, who didn't sell. And from there, price tends to go down and people start to say, okay, I'm going to hold again.
Exactly. And I think one of the reasons you see this so rapidly increase and rapidly decrease is because the number one thing that drives sentiment and the number one thing that drives capital and emotion and just general thought process behind their investing decisions, it isn't rational thoughts. It's not, oh, well, price has already increased 1,000%, let's wait for a pullback. Or price is down 80%, historically this is a great time to accumulate. That's not what happens. People are driven by price. If price is going up massively, then their anticipation is for that to continue forever, seemingly. And this is where we kind of circle back to the fear and greed index, where you can see this inverse correlation where people are taking the exact opposite actions that really would be most beneficial to them. So we can see from every single market bottom, the most opportune moment to buy, that's when people are the most fearful. And like I was saying before, of when I've been trying to accumulate at the bottoms of the previous 2 cycles, I didn't necessarily rely too much on data or on-chain metrics or fundamentals or anything like that. you can kind of just sense how much despair there is when it comes to this industry. And again, at the exact market cycle peaks, you see things on Twitter of people saying that $10 million is just not enough to live on, and Bitcoin's going to 500K, and this is where people choose the colors of their Lamborghinis. This is when, again, people are most bullish, people are wanting to buy more, but this is the least opportune moment to do so. And I think the market is just a general punisher of a majority. I think if a majority of people are buying expecting considerably higher prices, then those people that bought down here kind of realize the situation we're in and begin to take some profits. And when everyone's selling here because they anticipate 12K, well, then the smart capital is going to come in, the more experienced buyers are going to come into the market, scoop up all that cheap discounted BTC because they've been here before, and lo and behold, we're up a few 100% in just a few months.
Crazy how I've gone from that bottom. I
Yeah.
the way I looked at this at the fall in price, where it was a very depressing bear market, not much volatility. Like if you look at the 2018 one, at least we had it go up, down,
Yeah.
a little like it's gonna go up. At least we had volatility to sort of trade. This one, we didn't have anything, as in past that point exactly. It just went down, a little bit of a pop over there, and then we bottomed. So now I have a feeling that because we saw no volatility sort of on when the price was going down, because we saw no volatility really to the upside, I think that's going to be a mirror for where we're at the moment. And this time we're not going to see any, you're not going to see too huge volatility on the way down.
Yeah, definitely. And this kind of plays into what I was saying before, where the market likes to punish most participants. I think the reason we're not extremely greedy now, because I mean, in the previous cycle, you could see once we had this run up, people were extremely greedy and extremely bullish. I think a lot of people, more than would like to admit, are still sidelined. This cycle, we've not had the dips to really reaccumulate. We've had 10, 15% occasionally pullbacks. But like you were saying, people calling for 12K, even when we were at $30,000.
It's been frustrating. It's been frustrating.
Of course.
So it was depressing for the bear market, but it's very frustrating for those that want to get in and they say, okay, I'll get in at this price, but it's not exactly going down to that price. It's just going, it's going down, but it's not exactly going down to that price, which is like that 30,000, for example. That 30,000, a lot of people are expecting it to go back down there. But I don't know. Unless we have sort of some panic or shock, I don't think it will end up there.
No. If we were to go to $12,000 now, that would be even 30. I would say that'd be a hell of a pullback from where we are now.
30 is debatable, though.
Yeah, that's a possibility. I could see. I'm open to everything. The way I like to approach my investing and trading is I never like to be more than 51% sure. Because if I tell myself that there is a very good chance that whatever my personal opinion or feeling is on the situation, then I don't necessarily trust my gut instinct. Obviously, I go against that sometimes. But at that point, I act more strategically. I have a very strict set of rules to say we accumulate when these signals are showing, and we begin to take profit when these signals are showing. And then it takes out that personal bias. Especially now, I think, going into this bull cycle, we're getting towards a point where people should really start formulating their exit strategy. Because like you said in the previous cycle as well, we'd ran up to $70,000, but when prices ran up to $70,000 from $3,000, it's very easy to think, oh, well, I think $100,000 next. I think $150,000, $200,000 next. And that is definitely going to happen to everyone this cycle. I'm going to be guilty of it. Everyone's going to be guilty of it. Even if we have a very rational and logical top target in our heads for this cycle, once we reach that and everyone's buying and everything you see on social media is all glitz and glamour, you're going to think maybe we can go higher. Maybe I shouldn't take profit. Think of how much more money I could have. So I think I'm going to take a very almost robotic approach, like I've done for my accumulation, to my distribution, because I'm someone that's very bullish on Bitcoin for the long term. But I can definitely see moments where we are too overextended, we are overbought, and taking profit is the most logical step to take. So if we look at something like the Pi cycle top indicator, I remember very vividly in the previous cycle, within a few days, this signaled the exact all-time high. And a lot of people, it's crazy how accurate this has been. So again, given the fact it's called every single market cycle peak, I'm working on the basis it's going to flash again.
Wait, what is this? What is this?
So this is the 350-day moving average, but multiplied by 2, and the 111-day moving average. And this is called the pi cycle top because once you divide those numbers, it's the closest you can get to pi, which is 3.14, with 2 whole numbers. So once these cross, so if I just zoom in to see the recent 2 all-time highs, once this lower band crosses above this 350-day multiplied by 2, it's called the all-time high every single time. Now, this is just a market cycle chart. So this isn't using any on-chain data. This isn't using any macro fundamental analysis. This is a purely technical chart. And it's basically just indicating that the market has moved up too quickly. And every single time within, I think it's 3 days, it's called the day of the all-time high occurring.
Can you zoom in exactly on the 2017 one? Because the line, whilst it intersects, you don't really see when.
So it intersected on December 17th, which was the exact day of the all-time high.
And in the last one?
So last cycle was a double peak cycle, so we're cheating a little bit, but that crossed on April 11th and the peak was April the 13th.
You were still, 4 or 5K off the top, so...
Yeah, I mean that, yeah, a couple percent in it, you're not going to complain. But I remember very vividly watching this chart, seeing the cross happen and thinking... I think we go higher. And I think everyone's going to be guilty of it. So this cycle, I've had a number of very strict rules written down, and I am basically an automatic Bitcoin machine. I don't take too much of my personal opinion into account. I execute as is written down, and I just stick to that religiously. And I think that's a great starting point for a lot of people getting into the space, because it can be very overwhelming. I'm sure when you first started learning about technical analysis and you see 1,000 different indicators and you see all these different Twitter, YouTube accounts telling you that their way is the best way, they show you how much money they've made, etc. It can be very overwhelming, and you can almost feel the pressure of thinking to yourself, well, I can't just do average. If I'm going for this, I want to sell at the exact top. I want to buy at the exact bottom. And it's just an unrealistic expectation to do. I did a video a few months back where I looked on chain to see how many people there were that bought on the day of the previous cycle bottom down here and sold on the day of the all-time high. There was one person that did it. There was one person that bought, didn't sell, and sold at the all-time high. So considering there's millions of people involved in this.
On the exact day?
Yeah, there was one person. So I think if you take into account how unlikely that is, and just really get it into your head that you're not going to be the person that buys at the bottom and sells the exact top, it becomes a much more easier, enjoyable, and just simpler approach to things. Because we can have the data to see, even if you didn't buy the exact bottom, if you're dollar cost averaging using something like the MVRVZ score at the bottom, and then you start to scale out when we see extremely greedy fear and greed index scores, for example, then you're going to outperform a vast majority of people. So I'm taking an approach of following a number of metrics, scaling into my positions, which is just dollar cost averaging in, not just blindly, but when the risk to reward is in my favor, and then starting to sell small portions of my position when we start to get the signals of the market becoming too overheated.
I think that's a wise thing to do. If you go back to the pi cycle, where are we at the moment?
So I did a video on this fairly recently, looking at the average rate of change of these two lines to see when they were likely to cross, because I thought that was
that is going to be my question. Can you forecast?
Yeah. So very recently I did a video. Let me just, I'll remove it and zoom in. Looking at the percentage increase over the past few weeks to see how it was going. And at the current trajectory, they're actually forecast to cross this summer. So it's actually dipped a little bit now, but if we kind of imagine them doing something like this, I did the maths behind it, and I think it was late August 2024 at a price of about $150,000.
Yeah. August.
Yeah, so if it's $150,000 in the end of August, then you can thank me for selling at the exact peak once again.
In a way, I don't really want it to come in August. It's a bit too soon.
Yeah, I agree. So again, this is one of those that I was saying where just because there's one data point or one feeling or opinion pointing towards something, I have to assume we're going to follow the historical trend, and it's going to take about 4 years to play out this cycle. So by pretty much every other metric, it's pointing towards sometime late to mid 2025.
So if you look at 2012,
Yep.
I personally think Bitcoin's gonna move something like this, like it when it was just born, basically.
So I could see something like that.
Which is what I think is gonna happen. Something along these lines.
I have two scenarios for my bullish case, and one is maybe we do have a peak this summer, in which case I would imagine we might have a double peak cycle, which could look something like this. You could basically add 10 years onto this, or 11 years now, and then it would, peaking in summer, have about a year of a pullback consolidation. Yeah, well, it was April, May, yeah. So, and then, we have a pullback. So maybe summer 2024, and then late 2025, like we see here, maybe we get a double peak cycle. I think that's what many were anticipating in the cycle we've just had, and it ended up being a double top where we kind of peak, come back, peak again, a few percent higher, and then retrace, which is unlike any cycle we've seen before. So it's hard to anticipate something we've never seen before. So that's kind of one scenario I see playing out. But the other one, and looking at all the metrics...
Sorry to interrupt. My question was, I'm thinking now, what did the pi cycle do in this case? So it crossed over.
It crossed over April 6th, and we peaked April 9th.
Timed it perfect. And then the fall in price wasn't that massive, I think. So it topped at 214.
It was a pretty stark decline, $214 to $69.
70.
Yeah, and then
it went down about 60%.
And then again ran up from 214. It did a 5x from that high to this high, and again it called it within just a few days. So pretty remarkable timing, especially considering it was a double peak cycle. So
I think you're right. I think if the pi cycle says it's time to sell,
I've convinced you. If the buy cycle says it's time to sell, it's time to sell.
At minimum, you sell and you watch, and then you monitor what's going on.
Yeah, so I think I don't just take one approach in that I've accumulated at the bottom and plan to sell at the exact top. It's not going to be possible, but I'll try and start taking some profit around the top. So this is where I have kind of allocations of my capital to certain different things. So I have a portion that's long-term hold, I don't touch. I have a portion that I'm accumulating with on a very long-term macro basis. But then I do have a small portion that I'm more actively trading with. And this is where a lot of on-chain metrics that are more short-term focused, like the active address sentiment indicator, have been incredibly accurate over the past few cycles again. This is looking at the number of active users on the network, or the change in active users over a 28-day period, and the amount of percentage price increase or decrease. So we can almost see a divergence where if the price is increased way too much considering how many new people are in the space, then we start to cross this upper red boundary. And once we cross beneath it, it's usually a good indication that we're a bit overheated. So I'll just zoom in.
So when it goes up, when that indicator goes up, like then between November 2020 and January 2021, you saw that spike.
Yeah, so I wouldn't necessarily say, again, kind of like the fear and greed index, just because it's extremely greedy or just because this is above the deviation doesn't necessarily mean it can't continue to increase.
I'm trying to understand though what it's telling us. So when it's going up, it's basically meaning that the active addresses with Bitcoin in wallets is going up.
So this orange line is actually the price change. So this is where we see the active addresses. So once these red and green lines are increasing, more users are entering the space. When these are decreasing, there's less users entering the space. So basically, this is trying to tell us if there's enough fuel for the fire. Because if lots of people are coming into the space, that's a lot more potential to push price higher. Whereas if there's very few people entering the network and price is increasing very rapidly, it doesn't kind of make sense that this move is sustained for much longer. So this is why we have both of them to kind of see the deviations between them. And again, this is one where once we've crossed back beneath this red line, it's always indicated a little bit of a pullback. So again, pretty much at the all-time high here, crossed, and then that was just before. And then when we cross back above it, it means that we've kind of decreased too much for how many users are in the space. So this is a good shorter-term metric. Currently, we are, if I just zoom in here, we actually dipped just beneath this lower deviation immediately before we ran up. So we're about 10 to 15% higher. And currently we're right in the middle. So still there's a lot of room for further upside according to this metric, because even though price has increased a little bit, we're actually seeing a fair amount of new users coming into the space.
So if you remove the price, the 28-day price change,
we can see these green and red lines have started to increase. And we can see that the 28-day active address change, at least a few days ago, was 30%. So there's 30% more people involved in the Bitcoin network. So that obviously just gives you more potential for price to increase because there's more people actively buying it.
Interesting.
So we have a few different active address metrics that I think are really helpful. And I can't remember if it's in, the active address growth trend. So this is a really interesting one we've added recently, where you can see multiple different moving averages of the amount of new users in the space. So for example, the 365-day, which is this blue line here, and the 30-day, we can almost use this as a moving average crossover. So in the previous cycle, for example, once we actually crossed up, the monthly average new users coming into the space had far exceeded the yearly average users. That was the fuel to start the previous.
Walk me through this chart again, because I didn't quite pick up what I'm looking at.
So this orange line here is just the amount of users on the Bitcoin network every single day.
Which is what we just saw. We saw new users.
What we can do then is add on something like the 365-day average of this. So we can see this is just a lagging moving average of this metric. But then we can look at the 60-day moving average or any other short-term average to say, is the rate of change increasing compared to the yearly average or decreasing compared to that? So like I was saying in the last cycle, once we saw this cross beneath, it meant that the amount of new users coming into space, the amount of Bitcoin network active daily users was beginning to decrease so much that it dipped quite a bit beneath the yearly average users, which is a pretty bearish signal if people aren't actually using the Bitcoin network. So then following that, we obviously had a bit of a bear market. But once we crossed back above that, price was at around $4,000. And then that kind of signified a little bit of a pull, a little bit of an upwards price action period. And then when we dipped beneath, just before COVID happened. So there was actually a few signs indicating before
it timed the bear market perfectly in 2018.
And it pretty much timed the bull market perfectly in 2022 as well, because again, once we crossed back above this yearly average, we had this rapid expansion in price.
And then it crossed it more or less at the top.
Yep, pretty well. We'd actually already pulled back a little bit here. Price was $40,000-ish, and it's not been perfect. Again, I think because we're seeing a little bit of a change in the market dynamics, given the fact that there's so many Bitcoin derivatives. For example, people don't necessarily need to buy Bitcoin in their personal investment account or anything. They could buy Coinbase or MicroStrategy and kind of get indirect Bitcoin exposure that way. And through leverage trading Bitcoin futures, Bitcoin options, this kind of takes away from the purity, if you like, of these signals, because there's not as many people actually using Bitcoin because they don't need to. So maybe in the future, we actually need to kind of adjust these metrics a little bit to account for the fact that there's less Bitcoin being actively traded. The amount of liquid BTC is on very much of a downwards trend. Maybe this cycle, everything is as it has been for the previous few cycles. But when we looked at like the HODL waves and you saw, there's 20% of Bitcoin being traded, and next cycle there's only 10% available. At that point, we maybe need to adjust for the fact that there's just not enough Bitcoin for some of these metrics to work naturally.
Agreed. And right now we're below it, so we're below the 365-day moving average.
Yeah, again, another clear indication, that we have so much upside potential still available, because we're seeing this price increase, yet retail aren't here yet. We're seeing price massively expand, and still there's no one to actually come in and buy Bitcoin at ridiculously high prices yet. And we've seen that every single cycle. Is it going to be the same extent that we've seen in previous cycles? Maybe not. Maybe people have been burnt a few times in the past and don't want to get too involved with cryptocurrencies. But I think that's negated by the fact, like we were saying, there's so many ETFs now that are backed by real Bitcoin that investors may be purchasing or gaining exposure to the crypto markets without even necessarily being aware of that. If you're buying a broad market index, if a pension fund is buying that on your behalf, you gain crypto exposure. Bitcoin price is positively impacted, and you didn't even know it was in your investment account. So I think it's a very exciting time because we still have so much room to the upside by pretty much every single metric, by pretty much every single market cycle chart as well. We still have multiple months, if not years, remaining of a bull market. And we've already seen price over triple. So that's very promising for what's upcoming.
So just a question for you. So we identified the potential high in August. We mentioned 150,000. Why 150,000?
That was just looking at the percentage change of the pi cycle top. So I'll go back to that. I'm not saying 150,000 is guaranteed. What I did was, just for that example anyway, is I looked at the percentage difference between price at the peak and the orange line. So we can see kind of diminishing returns. I can't remember the exact specifics, but I think here price was a few 100% above this orange line. And here price was 200% above this line, or 100%. And then price here was only 50% above this line. So the difference between price and these moving averages at the cycle peak is decreasing. So I just took the same decrease and kind of imagined that in the next cycle, and that suggested $150,000 given
Maybe take the average of the tree.
Well, that would be nice. But I think it's one of those where if we go to something like the portfolio tools, we can see that Bitcoin is seemingly on diminishing returns, where we can see every single cycle. So the first cycle, it was, 40, 50,000%, and then it was 50,000% again. But then following that, we had 9,000%, and in this most recent cycle, 2,000%. So we can definitely see a trend to the downside in terms of percentage returns. Now, again, this is due to the fact that the amount of capital required to come into the market is just so much more now. But currently, we're actually outpacing both the last cycle and the cycle before that. So if there's ever been an opportunity to kind of disprove diminishing returns, this might be the cycle where Bitcoin maybe still sees 2,000% returns.
So you said we're front running the 2017 and the 2021 bull market, correct?
Yes.
What about the 2012?
Oh, we're way behind. This is the orange line here. We are, by this time in 2012, Bitcoin had already done a 10x, over a 10x, made over 1,000% returns. So that put us at $150,000 already. So I'm not holding out for us to follow anything like that. But even 2,000% returns that we saw in the previous cycle, what does that put Bitcoin? Over $300,000? Again, that's not something I'm going to complain at. But I think when we're talking about future price predictions, it's always worth looking at the stock to flow model. I'm not sure how aware of stock to flow you are.
I'm quite versed in stock to flow. Actually, I've come across a very interesting Bitcoin power law, which is shockingly accurate as well. And I'm looking to learn more about that, actually.
Yeah, so the Bitcoin stock to flow is what we have for now. We might look into adding the power law corridor, I think it's called, chart at some point, because I've seen it as well, and it's very interesting. The original one, I won't go into it now, but we actually have the rainbow chart, and those original logarithmic and power law things have been around for years. I think 2013 was the first one, and they're still, not too far off. So it's pretty impressive that for a long time we've been able to model almost the Bitcoin adoption and then see how that relates to price as well for so long. And I think stock to flow is one of the best examples of that, where I remember very vividly down here when we had such a divergence from the fair valuation of Bitcoin according to its stock to flow, that people said the metric was broken and, you know, we were never going to actually follow this valuation. But who knows? We're back at the price that this model's predicting, pretty much at a similar relation price to where we were at the halving events every time.
And that says what? That says
$440,000 a year after the halving.
the past, it more or less mimicked the rise in price pretty well, no?
Yeah, every time we actually had a bit of a divergence.
This one's going to be a very good test for it, I think. And
Yeah.
if it does hit the top, it's basically looking at what, about 400,000?
Yeah, so Plan B, who coined the stock to flow model, he actually has a few different models for stock to flow. So I think he has one at 120, 280,000, and then this one's 440,000. So it's one of those where it's kind of being refined, and remodeled and optimized, etc. But according to this version of the stock to flow model, $440,000 would be the fair valuation of Bitcoin a year after the halving event. So again, that would blow the theory of diminishing returns out of the water, and it would certainly inflate our pockets a little bit as well. So I wouldn't complain at all. If that's possible, is that possible? I would say it's not as likely as diminishing returns. I would say even if, you know, we see 1,000%, that'd be 150k. That falls pretty much in line with the percentage decrease we've seen from cycle peaks. Whereas $450,000 practically, that definitely takes that out of the equation. We'd far exceed the percentage returns of the previous cycles. But who knows? Anything's possible. Again, I'm one of those where I'll be managing my risk appropriately and kind of just following what the data tells us.
I think psychologically first, we need to get to 100.
I think that's the next logical,
because
big
everyone
barrier.
wanted to get to 100 on the last run, and the fact that it didn't come was depressing in itself. But you know, getting to 100k is not easy. And now we're sort of what we need a 2x literally.
Yeah, pretty much to the dot. So I think
it's likely now because the mood is a lot more different.
Yeah, and I'm actually quite interested to see how we react at $70,000, the current all-time high. Because again, I remember in 2020, once price had actually come just towards here, so after the bear cycle, price had reached. I still didn't zoom in correctly. Let me try again. Here we go.
So wait, what are we looking at now?
This is still the stock to flow, but I wanted to highlight potential price action over the coming weeks and months. So the most recent example we have of price hitting its previous all-time high was here in 2020. So we can actually see when price topped out at $20,000, we obviously had the bear cycle, a bit of a rebound, and started the bull cycle. And I remember when we actually got back to $20,000 again, and everyone was kind of claiming that that would be a really hard resistance. We'd maybe see a retracement back towards the 10k level because everyone's going to be taking profit at that point because, you know, everyone who bought at the top now just wants to break even. But we didn't. We broke straight through that $20,000 level. So I think a lot of people are looking to the previous all-time high, the $69,000 price, as, oh, well, this is going to be an area in which everyone's beginning to take some profit. But maybe we just blast straight through that. And obviously 100k is the next big psychological barrier of now we go into 6-digit territory, which is crazy to think about.
So 31st December, I was going through Balkowski's encyclopedia because I like to do it every now and again when I'm not sure what the price is going to do. And I found a chart that mimics Bitcoin from 2017 all the way to where it was at that point in one single chart. And it looks ridiculously the same. You know, it starts off with the bottom, then it goes up into a broadening wedge, which is what happened in 19, I think, and then it punches through double top with a partial rise, depressing down, and then the same kind of vertical upward move to the all-time high. So I was under the impression, okay, if this chart has played out so similar to the one I'm seeing in his encyclopedia, then that would mean that probably Bitcoin's price is going to go up to its all-time high to around, let's say, 62, 63, whatever, close to it. But then it will go back down, and it will go back down, I think, to about 40. So I think we could see a first huge major pullback, maybe huge, substantial pullback from the all-time high this time. That's my opinion. So I think we went up pretty much euphorically the whole way through after this bear market to the all-time high. And then I think what's going to happen is people will sell and it will push the price down to 40. That's what I think.
I could definitely see that. We haven't had, however, we maybe had 20% retracement in price action this cycle now, whereas 20% retracements in every other cycle have been fairly common. We've seen lots of them. We've seen 50% plus retracements. So the fact that we've had very few of these retracements is kind of telling of how bullish conditions are, but maybe also lean towards the fact that we're maybe overdue. But this is, again, kind of what's the most painful situation for investors? Is it no pullbacks? Because everyone who's sidelined saying, once we get the 20% pullback, I'm gonna buy, I'm gonna go all in. If that pullback never comes, then they're the people who are going to get very angry and end up being the ones that buy when we're up here. So it's interesting. I can see both sides of the argument of, well, it's probable that we get one, but then max pain is probably don't give people the opportunity to accumulate after a pullback and just continue pushing higher. So again, I get kind of all these scenarios and ideas, and I just manage my risk, assuming that they're all equally unlikely. And then I kind of always do fairly well.
What about altcoins? So first of all, Matt, thanks a lot for taking the time to go through all these really cool charts. A lot of information signaling, I think, that price of Bitcoin is looking healthy at the moment. One key takeaway that I'm going to definitely remember for sure is the Pi cycle, and in August, that's forecasted, let's say.
Yeah.
But now I'm just curious, what's your opinion on altcoins? And does Look Into Bitcoin offer any on-chain analysis for altcoins?
No, we are Bitcoin specific. The only reference we have to altcoins is Ethereum, which is Bitcoin versus Ethereum. And we can see Ethereum's massively underperformed, sorry.
What do you think? So I have opinions on this. What do you think of the BTC ETH chart?
I think so. This is all personal opinion. I'm not the biggest fan. Yeah, I'm not the biggest fan of too many altcoins. I think I have no problem with altcoins existing. I think they bring tech innovations that can be applied to Bitcoin in the future at the very least. So ordinals, for example, I know they're not necessarily fulfilling any requirement right now, but the fact that we can have digital ownership native to Bitcoin provides a lot of potential going forward. So that's just one example. Lightning and other layer 2 scaling solutions. We can almost see altcoins potentially as test nets for Bitcoin. Because Bitcoin's a software that can evolve, it's an open source project that people can contribute to, and it can just continue to get better and better. So altcoins in general, I think they serve a purpose. I do think 99.9% of them are just absolutely pointless and destined for a price of zero. Ethereum, of course, is an interesting project. Disclaimer, I do own a little bit of Ethereum. Bitcoin is probably 90+% of my holdings, but I dabble. And I think Ethereum is interesting. I actually released a video today, I filmed it today, going over whether now is the right time to potentially start rotating into altcoins. And the kind of end conclusion to that was probably not. We're still likely to see Bitcoin outperform for a sustained period of time. Bitcoin usually has an extended period of time where it outperforms a vast majority. If I just go into the BTC.D chart here, I'm not sure if you're aware of this. This is the Bitcoin dominance chart. So this is looking at the total crypto market cap that is made up solely of Bitcoin. So it currently sits at around 54%. Historically, in every single cycle, this increases noticeably during the bear cycle and into the early stages of the bull cycle. In the previous cycle, we peaked in December 17th, I think it was, and then altcoins rallied for about a month. But then after the dominance hit around 35, 36%, it doubled to over 70%. I think we're going to see something similar here, especially considering the halving event coming up, especially considering the ETF. Bitcoin dominance this cycle bottomed around 38, 40%. Even if we only see a 50% increase on that. So last cycle we saw a 100% increase. Even if we only see a 50% increase, to 60%, we're still likely to see Bitcoin far outperform a vast majority of altcoins for quite a bit longer.
So you think Bitcoin dominance goes up from here?
I think Bitcoin dominance definitely increases, probably to where I've got highlighted on my chart here, this 58 to 60% region.
I think so too. I think 58, 60 sounds about right. And then after that, we see.
I mean, who knows? Maybe after the halving and all the ETF inflows, we don't see 60%. It kind of goes to where it's been a key level of, well, a key turning point previously, which is kind of the 70% region. In which case, altcoins get absolutely decimated for months more, which, including Ethereum. So I think if you want to buy altcoins, go for it. I'm not here to tell you what you should or shouldn't do with your money. And obviously, if you can play the altcoin cycles very well, it's a chance to really increase your gains. Even if they're just leveraged returns to Bitcoin, the price actions are so correlated, it does give you that increased exposure. But I think if you're going to do it, you have to do it smart. And I think rotating into altcoins now is not the way to do it. Ethereum is a project, like I said, that I own, but I'm not looking to increase any exposure at the minute because it's underperforming so much, and I continue to see it underperforming for at least a little bit longer. A metric I've found...
It recently had a nice pop from 0.48 to 0.6.
Yeah, it did.
And at that point, I was like, okay, this is a decent move to the upside, but it is already at 0.05354. So I'm again thinking it's going to go down. I think ETH is likely to hit. I think I'd be comfortable getting into ETH anywhere between 0.04 and 0.03.
Yeah, I mean, the thing is for shorter term plays is the only reason I would ever kind of own an altcoin. I own nothing long term apart from Bitcoin because Ethereum is, by all accounts, it's the second largest and it's probably the most likely to succeed long term alongside Bitcoin. It's also apparently in the process of potentially having an ETF approval in the coming months. I'm not sure if that's the case. But either way, it's definitely number 2 crypto. And even the number 2 crypto when compared to Bitcoin has massively underperformed. It peaked against Bitcoin in June 2017. And it's just not even been close since then. Even after the 2017 December 16th Bitcoin peak, it didn't reach those highs. All of this cycle when there was such a narrative around NFTs, digital ownership, things being built on top of Ethereum, it didn't even get close to what it has done previously. And it's now seen a very long downwards grind. And I can't see it increasing to the levels it has previously. Maybe it exceeds the previous cycle Bitcoin ratio, but I see the chances of it getting anywhere close to these two peaks as super, super low.
I think so when they moved... Sorry.
I was just going to say, for me, if you're looking on a multi-year basis, it's Bitcoin or nothing. If you're looking for a few weeks or a few months, especially the most opportune market moments when the Bitcoin dominance has almost certainly peaked and you're looking for a short-term play to increase your short-term exposure, great. Altcoins can serve that purpose. But for a long-term hold, there's absolutely nothing in my bag apart from Bitcoin.
And I think that downfall from 0.08 came when they moved from proof of work to proof of stake.
Yeah, I mean, I don't want to get too much into, because people have very strong opinions on the proof of work, proof of stake thing. I, for one, like the proof of work, for Bitcoin. I think it promotes more environmental solutions to energy, and I think it increases the security and increases the democracy of the network. Proof of stake, I think, generally tends towards whoever has the most control, which is the exact system we're trying to break away from with crypto. So I think it's kind of against the initial narrative and reasoning behind creating Bitcoin. I don't necessarily think it's a terrible system, but I'm not too kind of stuck up on that. But yeah, these narratives are always going to be just a way to try and catch up with Bitcoin. Obviously, Ethereum serves its own purposes, but a lot of people talking about a flippening where they see Ethereum starting to exceed Bitcoin's market cap. It's in the complete opposite trend for that to happen. And for that to actually happen, which I don't think it ever would happen, there'd need to be some form of innovation that just isn't available on Bitcoin. Because you're not going to beat Bitcoin on being a money. Ethereum, which tried to fill the digital asset ownership and layer 2 solution narrative, worked to some extent, and it obviously is still working, but it's not going to push its market cap above Bitcoin. So unless there's another area that either Ethereum or another altcoin can fulfill that Bitcoin, or for at least for the time being, can't, I can't see anything really coming close. And especially over the few months, again, like we can see with the catalysts of the halving and the ETF event, it just seems crazy to be putting your capital into something that's almost certainly going to underperform. Sorry.
It's true. It's actually, you've laid it out really well, which adds weight to BTC dominance going up.
Yeah. And again, I like to be no more than 51% certain on anything. So I could, of course, be very wrong, and we could see Ethereum begin to absolutely skyrocket against Bitcoin. Who knows? But ultimately, even if that is the case, it is still very much correlated to Bitcoin. If you look at the Ethereum chart, the Solana chart, the Ripple chart, Litecoin, whatever your favorite altcoin is, if you line that up to Bitcoin, the returns are so similar. The price action is very similar. They are just leveraged products. I think it's gamma or beta. My options knowledge isn't great, but the beta, which is the correlation, is almost 1. They follow price action perfectly. It's just more volatile. So if you want that, then just leverage trade Bitcoin if you really want to increase your volatility.
Agreed. Matt, this was really, really fun more than anything else. I really enjoyed listening to you speak and show all the different kinds of charts. Maybe as a conclusion to this video, which goes into a lot of detail as to the price of Bitcoin and now altcoins, what are your short-term targets? Let's call it 1 month and 6-month target for the price of Bitcoin.
So I think 1 month target. Historically, we always have quite a bit of a hype price rally leading to the halving event. And I think I saw a great tweet, I can't remember who was by, and it basically said, when you first got into Bitcoin or cryptocurrencies and you saw price increase 10, 20, 30%, that feeling was, amazing. It was great. And now we're seeing ETF institutional buyers copying Michael Saylor and MicroStrategy, accumulating small portions on their balance sheets, pension funds doing the same, and big sophisticated investors. And they're already seeing 10, 20, 30% returns. They're already quite giddy. And then you tell them that the rate of supply increase is going to decrease 50%. Wow, I think that's just going to absolutely pop Bitcoin's price to probably around the $60,000 region. That's my optimistic case of a $60,000 Bitcoin at some point before the halving event. So we're currently scheduled for kind of mid-April, about 2 months away. I don't know if it's going to be a day before that or a week before that or a month before that, but I think a $60,000 Bitcoin would really indicate a huge kind of turning point in Bitcoin as an investment product from this, individually retail traded, speculative, weird technology to, oh, this is genuinely investment product for not just individuals, but for institutions, sovereign states. El Salvador and other countries might even start buying more. So I think just the hype of that could push us to $60,000.
Definitely. I think that's a good, that's sort of my prediction as well, my forecast. And I've also been very much getting interested and curious again about mining. Mining's been a huge topic, which I'm trying to learn more about actually.
Yeah, so the mining is quite interesting because, again, with the block rate decreasing 50%, we're likely to see quite a bit of volatility because the miners have just such a huge impact on Bitcoin. We can see the halving events here. This is the block reward in BTC for the miners, decreases from, 1800 to 900 ish, and it'll go down to about 450. If the miner revenue decreases 50% overnight, they either have to sell to continue operations or their hash rate sees some volatility. Basically, price is probably going to see quite a bit of some wild swings following or leading up to the halving event. So the miner narrative is really interesting over the next few months. So maybe we follow a similar path that we have in previous cycles where we have a hype leading up to it, mainly retail driven, people knowing that the supply is going to decrease. But maybe following that, we see a bit of a pullback considering that miners have just seen their incomes basically drop 50% and they need to start selling to just fund their operations. We've seen it in every single cycle. We've just seen quite a bit of a hash rate pullback following that. So I could see something like that. If we were talking in 6 months' time, if we see a run up to the halving, a pullback following the halving, in 6 months' time, slow grind up following that. I'd like to say.
You think we're at 100K in 6 months' time?
No, I don't think we're at 100K. I don't think we're at 100K. I think we're flirting with the previous all-time high, around $69,000-$70,000. I could kind of see.
Listen, that's around August time, though.
Yeah. I could see something you mentioned before where we maybe have a run up to the halving, a bit of a pullback, a run to the all-time high, again, a little bit of a pullback, and then once we break that $69,000-$70,000 barrier, maybe we get a bit of a pop to 75K or something. But I would like to reiterate, I'm 49% sure none of this will happen. I'm just going to manage my risks accordingly. But if we get 60K within, I'm not going to say a month, I'm going to say within 2 months. And then within 6 months, if we can break convincingly the previous all-time high, then I think we're potentially on track for 100K by the end of the year. If not that, then 75, 80K, and then who knows what 2025 brings. Maybe
I think the top comes in 2025.
Me too. I imagine we usually top out in Q4, so kind of November, December time. If we get November, December 2025 at somewhere between $120,000 and $150,000 Bitcoin, I think that lines up with all of the data. It lines up kind of with my personal gut feeling based on the topic as well. And I don't think many people would complain at that. $120,000 to $150,000 Bitcoin only 18 months away. You just need to look at the risk to reward. What's the downside potential there? What's the upside potential? And again, Bitcoin is likely to be the best performing asset of the next few years, just like it has been for the last decade or so.
Agreed. Cool, Matt. Thanks a lot. Much appreciated. We have to have another call in at least a month's time.